What's up, guys? All right, we are having the correction finally. We are waiting for that for a few months during this distribution period, and now we know that it is a distribution because we had the price dropping down. So now this is the question: whether we have the low here and it's established, and will continue to go to the new all-time high, or this is the start of the new bear market and we are going to like a period, maybe at least 1 year or more, of the declining in price and a lot of blood and so on and so forth. Let's try to answer this question without emotions and without being too biased towards one or another scenario. Okay, well, actually, this decline was kind of expected because although I was saying that this is either accumulation or distribution, so the exit from this area could be up or down. We don't know before it happens, but if you remember, I mentioned many things showing that there is a very alarming point right now, like those phases for growth, which we also reached the final phase at, and this is like universal for all the markets. The golden ratio multiplier spotting the highs every single time, and also with the timing, not only the price but timing, and this time it was also the signal for this point was around the all-time high. And another one is the resemblance of this rise to the previous rise in 2019. So many signals, like on the monthly time frame we've started to see the weakness of the trend and a lot of the bearish signals, and so on and so forth. Even the parabolic SAR on the weekly time frame broke the support area, and yeah, it happened just first time during the whole bull run which we had recently, not to mention other things like moving averages and so on and so forth. This trend line was broken again. I told you that if it happens, then it's very likely that we will continue to go lower. It happened. Okay, so what to think about this behavior right now? I must say that in principle it's really hard to say what exactly will be. It's impossible to say. So it might be one of those corrections which we had before and we have experienced before, and basically because we had such a huge rise without the major corrections so far, we may say that okay, it's actually the point when the correction should be much deeper than before, and this is reasonable, and now we are going to go to the new rising phase. Is it possible? Yes, it is possible. Also, if we look at what happens with like exact point of the drop, we actually have quite a lot of the volume, and the pullback is reasonable. So we dropped below $30,000 and now we're above $40,000. So we are kind of having a nice pullback with a rising volume. So it's classic classical signs for the short-term reversal of the abrupt correction. But this is not all. First of all, as soon as this is the distribution, right? This is the distribution, and despite it's not the like a sharp peak as we had previously for the all-time highs on all the cycles of Bitcoin, it could be that this is not the major all-time high, but like intermediate high, and after this distribution, which is quite broad and quite deep, we would have to see much lower price. According to the classical understanding of the accumulation distribution process, we would have to go a little bit lower, a little bit higher than the accumulation zone. So an accumulation zone for our current cycle is around here. It's probably something like $10,000 plus minus. So this is the distribution. So we should go somewhere below 20K. This is the bearish scenario, of course, and it's not necessarily to happen. But if this plays out with from the classical standpoint, then this is what to expect. So don't be in a hurry to sell everything which you have, because it's still just a possibility, and how high how probable it is, we don't know. So maybe just to lower the risk, to close some of your profits, this is always a good idea. But what I was going to say about like general depth of this drop is that the most expected depth was like 30-40% as we had so far in 2017. So you'd think that, okay, as soon as it is deeper, right, then it's probably the beginning of the crash. On the other hand, we didn't have the corrections during this growth to be like 30 or 40%. So because it was so long without corrections, then you would expect that the next big one will be more than 30-40%, which we had like 55. But this is not all. The thing is, here, even after 30% corrections, Bitcoin could recover relatively easily because it is a still small market, and it's still kind of possible for the people in the space be not panicking, and maybe even some manipulation is involved. But in any case, 30-40% is okay for the market to continue going up. If it is 60% or 70% as was before, then it's the start of the bear market. But let's say S&P 500 or Dow Jones, Nasdaq, or some others, if they have 30-40%, then it's the real sign of the panic and the beginning of the crash. So meaning that the higher capitalization of the asset is, the less drop amplitude it requires to start the bear phase. And here we have much higher capitalization than here, meaning that maybe 55% is actually too much to handle for Bitcoin. And this is exactly the point of starting the new bear period. Moreover, considering the depth, again, the depth of this accumulation and the width of this accumulation, the volume which we had here, it's not really that huge. And we didn't go below the previous zone of this accumulation zone, like it's much broader actually. Here, technically, if we want to liquidate as much people as possible, then a lot of stop orders are accumulated at that area. So we should go much lower, somewhere maybe to $20,000. We didn't, well, 25 at least. We didn't go there. So it's not enough in terms of the volume. Again, of course, it's just a speculation, so we are not sure what to how to deal with all of that. Is that okay? It could be a fake out, right? Because even with such a huge drop, this could be not the exit from the distribution, but the fake out from the accumulation. Why it is so deep, which is not reasonable, is that because there could be a liquidity crisis here, pretty much the same way we had in March 2020 over here, because there was a liquidity crisis, the order books were pretty much empty, and that's why the price dropped so low. The same thing happened here. It could be that it is the reason. And in fact, the actual fake out should be somewhere to $40,000, but because of this emptiness of the order books, we had this drop much lower. If so, then after the fast recovery, we should return to this zone and try to attack the $60,000. So if this happens fast, or at least we appear to be returning back here, then it's a very nice sign that this is the end of the correction, and we most likely will see the new rise. But again, stop orders are important, and we need to place them because there is still a chance that this not be sustainable. On the other hand, if this is the, well, actually I should show you this one. This is the previous support resistance area. Resistance, broken, support. After it was tested a couple of times, it got broken. Now again, we may say like this. So if it happens, then that's pretty good. And we actually do have a rising wedge right now, and this rising wedge is aimed towards the kind of the bottom of this previous zone. So if the rising wedge is broken here, then we might see something like that. The rising wedge is usually broken to the downside, so especially after such a huge drop which we had, so it is more likely that we'll see something like this. But if this doesn't happen, then again, that would be a pretty bullish behavior. So the practical thing for all of that is we need to see how the price will move here, or move or will not move. But this is pretty much the same as before. You remember this zone? I said we don't know where the price will go from this zone, whether it will up or down. So what happened recently? We saw the drop. Here it was actually the descending triangle. I also posted about it in Twitter, Telegram. So we tested it, had a pullback, test again, and the more we test, the more likely the support will be broken, and resistance actually, but here's support. So again, testing many times, and here it was tested before. So the more we test it, the more likely it is broken, and it became broken finally. So that what's happened. So basically, after this failed rise, after this failed return to this zone, we could open a short position. So pretty much the same we can do right now. So if we see that the price is having a pullback from this, the rejection, then we can open short position, or at least close our longs with a stop order here, and that would be a nice trade according to the risk to return ratio. If otherwise, then we should open long position. So it's pretty straightforward. I'm still a little bit concerned about the situation because in general, because we have a very, very low Bitcoin dominance, meaning that the risk in the market is very high. People are in the risk assets right now, and this is usually a very bad sign for the continuation of the growth. So it's pretty similar to what happened in 2017 and 18. So be careful, look at the dominance and how it will look like. And another point regarding that is, generally, I was thinking that we might see something similar to what we had in the cycle in 2013. So we had this rise above the previous all-time high, then the massive correction, 70% or so, then relatively fast accumulation here, consolidation actually rather, and the new all-time high. So you would expect that we might see something like this again, like this, right? And many people are saying that it's possible to happen, and it's the most likely scenario. And as soon as they are saying this, I'm less convinced that it happens, because the market doesn't follow the crowd's opinion. On the other hand, I shall point out that sometime before I showed you some interesting correlation with the price and Fibonacci retracement levels for the highs, like every next all-time high is at around 233% Fibonacci retracement level, and currently we are at only 161, and this is actually around the previous high here and some intermediate highs here, and now the same thing. So generally it's very likely, or kind of likely, that it happens once again. But saying that, again, we are trading probabilities. So if you want to survive this market long term, then don't be greedy. Always fix your profits to some extent and follow the price. Don't try to beat the market, but use the trend as your friend. That is the major thing to do good in trading. Alright guys, I hope that it is useful. I will keep you updated on the current situation. As usual, Twitter and Telegram faster and more often. And for today, that is it. I hope that we will meet next video. And thank you very much for watching. Safe trading. Goodbye.